Hello, you're watching Proactive. Joining me is Learning Technologies Group Chief Executive Jonathan Satchell. Jonathan, good to speak with you again. And you're out with a trading update this week for the 6 months to end June. And it looks like revenue came a little bit under pressure over the period.
Yes, in fact, it was a continuation of last year, Stephen, where we endured the same thing. It's fair to say that what's going on there is that what I call our learning infrastructure business, which is the largest proportion of the business, is remaining very strong. But those customers that take managed learning services from us also do a lot of what we call transactional revenue as well. And that was just at the lower end of our expectations. We expected to be flat year over year. It's not a particularly easy environment out there, but actually it was a few percent down.
You also faced some currency headwinds over the period.
Yeah, for investors to calibrate, we believe sort of obviously our main currency is cable, the pound dollar, and that was about 123 in the first half of last year on average, and it's 126 this year. So that definitely was a bit of a headwind.
So despite revenue coming in a little bit lower for the period, Jonathan, your adjusted EBIT is up. So that means you must have made more progress with improving your margins.
Yes, and that's again a continuation of a very stable story in this organization. As you know, when we acquired GP Strategies, we went on a margin or commercial transformation journey, which resulted in very substantial improvement in margins. That journey is slowing down now. To be clear, we've done the heavy lifting. We're into the what I would call the refinements, and some of those are harder to achieve, but we are still making good progress. And we've said in the statement that we expect to make further progress in H2. So yeah, feel good about that.
That's right, because you've given your full year revenue guidance as between 485 and 505 million pounds, adjusted EBITDA or adjusted EBIT rather of 91 to 96 million pounds. And of course, that doesn't take the Vector VMS sale into account.
That's right. And we wanted to just be hopefully clear for investors. So on a like for like full year basis, that's what it would be. Clearly, we completed the sale of Vector on the 1st of July. So we will not enjoy the second half of Vector's profits, which is around about £3 million. But that's the only adjustment. Of course, that's not a negative adjustment. That's I think, if you like, a positive adjustment for the fact that we sold that business for a fair and attractive price. And it was a non-core business. So that was a bit of our active portfolio management that's been successful. We continue to pursue other opportunities in that regard, and yes, the guidance now is 91 to 96, and I very much hope that we will come in at the mid or higher point of that guidance. That's our goal.
Jonathan, along with your trading update, you also gave a US regulatory update. It looks a little bit concerning.
We certainly should be respectful of the situation. We are concerned and take it very seriously. Obviously, when a US regulator tells you that there are deficiencies in what you're doing, you sit up and take notice. I cannot give you any details, one, because I wouldn't be allowed to, but secondly, because we don't know them ourselves to any great extent. We do know very distinctly and specifically that our American GP leaders are working extremely closely with the DCSA. They are fully aware of all of the issues. The issues are resolvable, and they are making good progress to resolving them, but they have not been fully resolved yet. So there is a remediation plan, if you like. I can't be clear on the timescales. It's not days or weeks, but it's not years. And we are very hopeful that these things will be resolved as soon as possible, and there is no stone being left unturned to resolve them. There are some systems related issues that need to be resolved, and some of those, of course, necessarily take time to deal with. But we look forward to updating the market in due course. We are continuing to work as it stands at the moment with all of our existing US classified contract customers, and we hope that that will be the case going forward.
Jonathan, maybe just going back to that Vector VMS sale, because that disposal has helped you to further strengthen your balance sheet. And I remember we've spoken previously and you had a debt of over 100 million pounds, and it's looking significantly better.
It is, you're right. I thank you for picking up on that. So Vector is part of it, and we enjoyed the $50 million proceeds at the beginning of July, and that, of course, is a big factor in our net debt now being as low as £6 million, as we reported at the 19th of July. But there's another factor here, and that is that we are a very strong cash converter from our EBITDA. We've done that for years, and that's the main a process that just consistently begins to reduce our leverage. And so our leverage was in a good place at the end of last year, but we have very substantially improved it. One, with the proceeds from the sale of Lorien that we received in January and Vector in July, and also continued good cash generation. So yeah, the balance sheet couldn't be stronger. And I would remind you, literally, we're not even at the 3-year point where in October 2021, we borrowed very heavily to buy GP Strategies. And at that point, I think at the end of that year, our net debt was around about 180 million pounds. So yes, the deleveraging has been swift and absolute, and I give great credit to the teams for achieving that.
I hope you'll keep us posted on any additional progress. Jonathan, thank you very much for the update today.
Thank you. Good to see you.
That's Learning Technologies Group Chief Executive Jonathan Satchell.